Welcome to Cat Eye U.S. stock. We watch markets with calm focus and sharp instincts. Monday, February 2nd, 2026, did not trade like a quiet bounce. It was a regime shift session. Stocks ripped higher with the S&P 500 and the Dow pushing back toward record territory. But under the surface, this was not just stocks up. It was risk on in equities versus risk off in hard assets. Cyclicals, financials, and staples grabbed the baton, while a handful of AI megacaps and old safety trades finally gave ground. And looming over everything was what traders called the Warsh shock, a perceived hawkish turn at the Fed that slammed metals, boosted the dollar, and rewired how investors hedge risk. Zoom in on the S&P 500 board, and the story sharpens. The heat map was overwhelmingly green. Financials, industrials, staples, big chunks of tech and healthcare, all leaning higher. Huge bright squares from Apple, Micron, AMD, Caterpillar, even retail giants like Walmart and Costco. But your eye keeps getting pulled back to those red blocks. Nvidia, Microsoft, Meta, Oracle, Netflix. And in another corner, energy majors and utilities bleeding red. Net-net, the troops joined the advance, and just a few of yesterday's AI generals, plus the old defensives, took the hit. That heat map translated into a very specific money flow story. Capital kept some tech exposure, but it migrated out of the Capex-heavy AI platforms into semis like AMD and Micron, infrastructure-tied names like Caterpillar, and high-quality software. Stronger than expected manufacturing data, plus optimism around AI-driven infrastructure demand, pulled industrials and financials into leadership. Consumer discretionary and staples joined in. Amazon, Home Depot, McDonald's, Walmart, Costco all catching a bid. On the other side, energy and utilities looked like cash machines. Crude slid, utilities sold off, and those classic safety buckets helped fund the shift into cyclical, earnings-backed winners. Driving that rotation was a violent macro reset. The so-called Warsh shock Kevin Warsh tapped to lead the Fed was read as a move towards sound money and a leaner balance sheet. The dollar firmed, Treasury yields pushed into the 4% range, and the move detonated what desks called the Great Metal Flush. Gold tumbled, briefly tagging the 4,500 area. Silver's crash deepened after the CME hiked margin requirements to choke off speculative froth. At the same time, a sharply stronger ISM manufacturing print flipped factories back into expansion for the first time in over a year. Add it all up and you've got a market dumping traditional fear hedges and duration while rewarding domestic growth but doing it under tighter financial conditions and a cloud of missing data, thanks to the shutdown-delayed jobs report. Around the edges, the rumor mill was busy. Desks kept talking about a great AI reset. Chat focused on whether Microsoft and Meta's giant AI Capex runs are peaking, and what shifting headlines around Nvidia's ties to OpenAI really mean. None of that is confirmed in hard numbers yet, but it definitely shaped flows. Traders leaned into zero-day upside calls on the S&P to chase the index. At the same time, they quietly loaded short-dated puts in Nvidia, Microsoft, and Tesla as insurance against a deeper AI unwind, and in the background, the earlier metal and crypto chaos, silver's crash, Bitcoin's swings, was treated as a barometer of stress in crowded trades, not a smoking gun for equities. Elon Musk just shocked markets by merging SpaceX with his AI startup, xAI, in a record-breaking deal that values the new entity at over $1 trillion. The move consolidates the so-called Muskonomy and boosts SpaceX's data center ambitions against rivals like Google and Meta, setting the stage for a blockbuster IPO later this year. But investors are still wary of Tesla's role in that ecosystem. Musk has a history of folding his private ventures together, and that raises questions about conflicts of interest and about regulatory scrutiny around those federal defense contracts. Palantir is surging after a massive fourth-quarter beat, but the real fireworks are in the guidance. The data giant said revenue jumped about 70% to roughly $1.4 billion, but it was CEO Alex Karp's letter to shareholders that stole the show. Karp did not mince words. He says the world of AI adoption is now split between haves and have-nots, leaving those without specialized tools, quote, naked on the beach. As Palantir projects its 2026 revenue to blow past estimates at around $7.2 billion, Karp is betting on a growing gulf in the market. In his view, rivals are offering science projects, while Palantir is selling the mission-critical infrastructure needed to navigate what he calls the Byzantine complexity of the modern enterprise. With the U.S. Department of War reportedly going all in on their platforms, Palantir is positioning itself as the bridge between raw language models and real-world military and commercial power. Let's start the single-stock deep dive with Apple. Apple ripped roughly 4%, riding follow-through from a record fiscal first quarter and upbeat guidance. Traders leaned into the idea that Apple offers AI upside without the same Capex drama dogging some cloud peers. Strong iPhone and services trends plus a clearer AI roadmap gave investors a cleaner megacap to own. On a day when Microsoft, Nvidia, and Meta were all under pressure, Apple's green box did a lot of index-level heavy lifting, and it suddenly looked like the new go-to big tech exposure in this rotation. Flip the coin, and you get Nvidia. Nvidia dropped close to 3%, even as the Nasdaq and the S&P climbed. Reports that its much-talked-about OpenAI infrastructure investment may be smaller or less definitive than hoped, added to existing valuation nerves. In this tape, Nvidia is the poster child for the AI hardware trade. Huge gains, huge expectations, and now, rising demands for Capex discipline. Heavy short-dated put buying underlined that investors are still nervous around the name, using it both as a hedge and as a barometer for how far this AI reset could go. While Nvidia took a breather, AMD and Micron stole the show. AMD ran roughly 4% ahead of earnings, helped by bullish talk that it can grab AI share as a second-source supplier. Micron surged even more on upbeat DRAM price and demand forecasts tied to data center and AI buildouts. Together, they crystallized a key shift. The market's AI playbook is broadening beyond GPUs. Money is moving into diversified compute and memory suppliers, where investors see more room for growth and a bit less headline risk than in the most crowded AI hardware leader. In industrials, Caterpillar became a poster child for the new regime. Caterpillar ripped more than 5%, extending a post-earnings rally just as ISM manufacturing snapped back into expansion. Desks framed it as one of the purest plays on an underappreciated angle of AI. All that compute needs power, cooling, and concrete. Caterpillar's move pulled broader industrials higher, and it was a key reason the Dow outpaced the more tech-heavy Nasdaq. On a day defined by rotation, Caterpillar stood in for the idea that the AI story is migrating from bits towards steel and dirt. On the consumer side, Walmart and Costco quietly told you a lot about sentiment. Walmart popped more than 4%, with investors leaning into its value positioning and steady traffic in a world of higher rates and a stronger dollar. Costco added nearly 3% on continued evidence of healthy membership and footfall. Together, they showed that investors still want exposure to the U.S. consumer, but they're gravitating toward earnings-backed scale players that can hold share even if conditions tighten further. Not every high beta name caught a bid. Tesla slipped about 2%, even as small caps and cyclicals rallied. Fresh reports of a deeper sales slump in parts of Europe, plus ongoing margin worries, kept the stock on the back foot. Layer on heavy short-dated options trading, and Tesla stayed a focal point for traders expressing skepticism around the more speculative end of the growth complex. On a day when the market rewarded earnings clarity, Tesla's wobble underscored just how unforgiving this tape is toward crowded, controversial stories. After the bell, Palantir added a new wrinkle to the AI story. PLTR delivered a big fourth-quarter beat and punchy guidance, projecting rapid growth well into 2026. In his shareholder letter, CEO Karp leaned hard into a haves versus have-nots framing for AI adoption, arguing that specialized platforms will define who wins. That tone, and the numbers behind it, supported the idea that certain AI software names may still have plenty of runway, even as hardware leaders like Nvidia face evaluation and Capex reckoning. How that after-hours enthusiasm trades in the cash session will be an important tell for the next leg of the AI narrative. Looking ahead, a few catalysts really stand out. AMD's earnings hit next, and there'll be a major check on whether this shift from Nvidia to alternative AI hardware actually has legs. Palantir's blowout quarter, and its fiery rhetoric, will filter into positioning across the AI software complex. On the macro side, traders are still watching the metals space, especially silver ETFs like SLV, as a barometer of forced de-risking, and over all of it is a data vacuum. With the jobs report delayed by the partial shutdown, markets are leaning harder on every second-tier release to decode the Fed's next move. This is a market that's still bullish, but very, very tactical. To wrap it up, Monday was not a simple relief rally. It was rotation without retreat. Equities leaned into domestic growth, small caps, and industrials, even as the Warsh shock, a surging dollar, and the great metal flush all signaled tighter conditions. The AI trade did not die. It morphed, spreading from a few megacaps into semis, infrastructure, and software, and the old fear hedges, gold, oil, and the classic defensives, got pushed to the sidelines. Heading into the next session, the question is not whether investors want risk. It is whether this new set of leaders can hold the ball, under a more demanding macro regime. Thank you for watching Cat Eye U.S. stock. Stay curious, stay calm, and we'll see you next time.